Well, what is going on, guys? Luke here today, and it's time to talk about Tesla's next earnings call coming up this week. Delivery numbers were yet another record, but of course, you guys know exactly how it's gonna work. There are many on Wall Street who could just honestly care less, regardless of what the numbers actually are. I mean, basically, you can cure cancer, but Wall Street really isn't gonna be interested right now if your name is Tesla. Sure, it's had a nice run coming into earnings, but that doesn't mean Wall Street is actually going to give it the respect it deserves after earnings call. We've all experienced that before. And with the market being on edge right now, with the bank drama and all the geopolitical tensions continuing to rise, is this your last chance to get out? Because this earnings will be the one that basically sends Tesla back down, basically to $200, maybe even a little bit lower, under 200 again? Or is it going to set up potentially your last chance to buy before the rocket ship takes off? And what price am I looking to buy at personally? So I will answer all of this for you today, right after you gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. So Tesla had record deliveries once again, but of course there's some on Wall Street that still aren't happy with it seems. I mean, and I know guys, it just sounds stupid when you say it out loud, but the bar is kind of very high for Tesla in regards to delivery numbers. So I guess Wall Street some on Wall Street just aren't going to be happy no matter what the number is, no matter how big they blow them out of the water. They're not going to be impressed. And I'm not even talking about guys like Gordon Johnson who will somehow say there's a demand issue despite the fact you have record deliveries. But let's just not get, facts get in the way of a good narrative there in regards to that. But you still have others on Wall Street who just aren't buying the delivery numbers regardless of what they are. Now, I know I've talked about it before in regards to deliveries, but it bears mentioning here again. I could care less if Tesla hit the mark or came in below, the mark of whatever the heck the expectation was by a few thousand vehicles one way or the other. I could care less. And a lot of those cases, it's just basically a 1 or 2% miss. But, I don't necessarily agree with the bulls either, who would just lose their minds anytime Tesla delivers above that number, even if it's just by a little. They swear up and down that it's the greatest thing since sliced bread, and it should absolutely add, another $50 to $100 to Tesla stock price because they absolutely blew deliveries out of the water. I don't necessarily agree with that either. So in regards to the earnings, if the numbers don't meet expectations, which the consequences will be harsh in the short term, but as a long-term investor, I'm not really that concerned, as I understand why the numbers may not be what they need to be despite record deliveries. And it basically means I'm going to get shares at a cheaper price anyways, because Wall Street doesn't know what the heck's going on with this stock in general and just seems to trade it wildly. But there are 3 big concerns that I have coming into this earnings call that are going to impact this earnings and the share price more importantly. Well, actually, before we get to those, just wanted to mention that the flash sale for Tesla's earnings is live now. If you want to see all my Tesla buys in real time, my complete watch list and price targets for all the stocks I'm buying, plus you get 5 courses for free. We got hundreds of tutorials. You can ask me anything on the live Q&As, and we got a stock analyzer tool coming that's going to be completely free for members to use. So make sure you check out the pinned comment and get your membership now, as that flash sale is going to expire after Tesla's earnings. All right, so back on topic with the earnings call, these are the 3 big concerns. The first big concern is that the Fed is going to do Fed things, essentially. I don't know how else to say that. The market is currently choppy, to say the least, because we are basically seeing inflation drop month after month after month, but the Fed is remaining hawkish despite basically getting their way with the economy and with the inflation and with everything else. So we are basically one big announcement, one kind of an unexpected geopolitical event, one Fed misstep from taking another leg down. And despite what all the Tesla bulls will tell you, including our very own Tesla bull, Tesla is going to give ground if that happens, just like everybody else will. I know we like to believe that Tesla is immune from all that sort of stuff, but they are not, unfortunately, so that is clearly a concern for me. And I'm sorry if that doesn't align with everybody's take, but it's the reality, and that's why you guys come here for information. Not just to be told that Tesla should be, $1,500 a share today or tomorrow or after earnings. That doesn't help you as an investor make sound and informed decisions. So I'm not going to do that to you guys. I apologize. You're going to get the truth here, even if it hurts a little bit. The second is, once again, all the drama surrounding Elon that never seems to end this year. I guess it started at the end of last year, and it's continued into this year. And in regards to this earnings call, Elon is honestly always a wild card, guys. You know that. And sometimes he hurts more than he helps because he kind of speaks off the cuff and he can be combative, and he didn't do that last earnings. I agree, he's done a great job this year, but it's absolutely something that could happen. And it's why we kind of love him, right? And why he drives kind of Tesla to new heights. However, it also sometimes hurts the share price in the short term when he does that sort of stuff. Earnings calls are from where you talk about the last quarter's performance and then kind of project where you see Tesla going, next quarter through the end of the year. And maybe you throw in a final section at the very end of the earnings call about some big future things coming, like Tesla bot, give it a brief tease and then kind of move on. But we all know that's just not Elon style at all. And it's going to be random, wild, and he may spend half the time discussing something that's years, decades into the future. You just never know. Oh yeah, and also talking about Elon, we also have all the Elon Twitter stuff that's still going on. Thankfully, this looks to be coming to kind of a close, or at least the noise has just kind of died down from it all, so we can kind of move on. But there has been some damage from that. So, you just got to kind of wait and see what is the fallout for that, because many already view him as kind of distracted, right, from Tesla with all this other stuff going on. And that's why they don't invest bigger into Tesla in the first place. So you can be sure that that is weighing on some people's minds during this earnings call, is going to be how distracted is he with Twitter and just everything else going on with him. And if you don't think some on Wall Street won't draw the conclusion that Tesla missing, even if it's just by a little bit, is a direct result of him not being focused, you guys just don't understand how the stock market and how Wall Street hurts. Fair or not, if that happens, it will have a short-term impact on Tesla stock, because there's a reason why Tesla is the most volatile large cap stock that has ever existed by a mile. I mean, even companies valued at 20% of Tesla, they're not this volatile. I mean, it's just crazy how volatile Tesla is. I've never seen anything like it. Bottom line, if the numbers don't meet expectations, or if Elon says something that can be viewed as negative, the stock will most likely get pounded once again. That's just the reality of the market we're in right now and the situation with Elon. And finally, we have probably the biggest mystery of them all, and the piece that to me is the most important, and that is how will the price cuts affect the EPS numbers this quarter? And I'm right there with you guys. Don't yell at me down there or anything else like that. I don't care if they cut the prices or not. They're just basically back to around 2020-21 pricing, and who freaking cares? They're still executing at a really, really high level. Remember, they raised prices back then to deal with inflation, and because the demand was just ridiculous, and now that prices have come down, they can cut prices and still maintain some really great margins, obviously clearly better than everybody else's margins. And also keep in mind, they have been getting more efficient and finding ways to keep moving kind of the cost to produce those vehicles down. But Wall Street is going to have a field day speculating around everything if they happen to not show a huge decrease, or if they happen to show a huge decrease in profitability, because that's basically where the blame is squarely going to go. Is basically, hey, they're not getting the margins that they need. They need to increase prices on their vehicles in order to make money. And if Elon can't sell prices, cars at that higher price, Tesla stock's in trouble. That's going to be the narrative. Now, there is one massive saving grace that could help us all in the event, even if there's a miss, and that is if Elon guides to higher delivery numbers, or if he just basically maintains guidance for the rest of the year, but also has a very positive discussion about margins and the efficiencies being gained and how they're going to make up those EPS losses later on in the year. So basically, if we can just kind of meet expectations and the commentary on the call is positive, it may be enough to maintain the stock and not let Wall Street get too stupid. So what am I doing personally, and at what price am I actually looking to buy more Tesla stock? Well, you guys know it. This is where having your plan set before the earnings call is key. And I know you guys hate that I say it, but planning and having price targets is key to investing, especially with a stock like Tesla, because it's just so unique and everything just goes crazy with it. But you absolutely can take advantage of this uncertainty, this kind of volatility that we get with Tesla, if you play the long game and stay away from all this short-term speculation. You've seen lots and lots of YouTubers get blown out of water with all this short-term speculating around Tesla and what it's going to do and everything else. They may be right in the short term, but they were wrong in the long term, and it's really cost a lot of investors. Really cost a lot of investors, if I could actually talk. I mean, and here's the scenario right here I'll give you guys. Suddenly, Tesla lowers the price of vehicles as we enter a slowdown, and Tesla isn't performing as a business or a company and is a terrible buy. That's some of the takes you're going to hear if that's what actually happens. That to me is just as dumb as thinking toilet flushing should move the stock up, but that stupidity is to our advantage as retail investors, because we get shares on the cheap and then can add at prices we shouldn't and normally couldn't be able to add shares of that. In this case, Tesla, we shouldn't be able to add shares at the price we'll get if they get really stupid. So I'm basically going to sit back, watch the numbers, and then kind of see what Wall Street does. I mean, if the numbers are good or great in my eyes, are they going to give me some juicy discounts because EPS wasn't exactly what they wanted? I don't know. I just know that I have cash ready to deploy, and I don't care about the price action nearly as much as I care about, is the business performing underneath? So I'm going to happily deploy around the $203 mark or so. That's actually my price target. And if Wall Street wants to get dumber, I will happily buy even more, even though I don't need it. My position is completely full. I don't need any more shares. That is why my price target is so low. One of the advantages of having a full position is I can wait until it's on an extreme discount in order to add to my position even further, because honestly, when you have all the shares that you want, there's no need to buy anymore, right? I don't need to do my DCA anymore, or my modified DCA, or whatever your plan was. You can essentially sit back and enjoy the ride. But for me, Tesla's such a great company, I'll happily buy more, but I'm going to buy more whenever Wall Street gets stupid, right? I mean, like whenever it's at 103 and everybody's predicting it at 80 or 60 or whatever, hey, that's a great time to add a lot more Tesla stock. When you have a full position, that becomes very, very easy. When you don't, that's where that planning comes into play. Hey, are you just going to DCA into it? What's your price target for the stock? Where are you comfortable adding more? Those are all important key questions that you need to answer in order to be able to successfully invest in Tesla stock. And if that seems overwhelming and you don't want to be part of my group, you don't want to take somebody else's, you don't want to be in somebody else's group or take a course, whatever the case is, I understand. Then just simply DCAing into a great stock is almost impossible to beat over the long term. So you can just go with that strategy right there. And remember, if you want to take advantage of the flash sale and take 5 courses to show you exactly how to do evaluation, set price targets, work through your plan, and have access to the best group of 6- and 7-figure investors, and get that stock analyzer tool completely for free for members as long as you stay a member, make sure you take advantage of the flash sale that's going on right now. Click this video here if you want to see the exact stocks I'm buying, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.